Good morning, everybody. It's the 9th of January. We are Signal Centre Talking Ball. I'm Joe, joined by Steve this morning. How you doing, Steve? Nice weekend?
Yeah, lovely weekend, mate. Yeah, nice
Good.
to it feels like we're going to get back in the swing of things this week. Yesterday, sorry, last week was a little bit. It's always a bit stuttery, isn't it? Start of the
Yes.
year, first week of the year. Non-farm payroll out the way now, and
Yeah.
obviously got a lot of volatile figures to come this week, inflation figures to come, and I think a few speakers as well. So should be quite an interesting week, and yeah, can't wait to get into it.
Yeah, good. Okay, well, let's get into the latest headlines and what's been moving markets over the past 48 hours or so. Obviously, we had the non-farm payroll numbers on Friday, and the initial reaction was pretty muted, but then we started to really kick on from there. I think the ISM number actually that came out around 3 really sort of sent things on their way. So the US numbers were strong. The non-farm payrolls increased to 223,000 for December, slightly above the consensus forecast of 200,000, while the November increase was revised slightly higher to 256,000 from the original estimate. We also saw average hourly earnings increase 0.3%, with the annual increase slowing down to 4.6% from 4.8%, which was actually the lowest reading since August 2021, and also below the expectations of 5%. We saw a slide in the US services sector. We saw the US ISM non-manufacturing index post a sharp decline to 49.6 for December from 56.5. So we dipped into that contraction territory below 50. The consensus forecast was actually for 55. So this is why we saw the volatility substantially increase after actually the non-farm payroll number itself. There was a sharp slowdown in business activity growth, and new orders component dipped sharply into contraction territory. There was limited slowdown in inflation pressures, with the prices index retreating to 67.6 from 70. Historically, this level for the headline ISM index would tend to suggest a slight contraction in overall GDP. We saw Treasuries post strong gains. The US Treasuries secured initial relief after the US wages data, then posted a strong gain after the ISM services data, with the 10-year yield sliding to near 3.56%. So this all led to a risk appetite, a rebound in risk appetite. Hopes for a soft landing in the US economy helped underpin risk appetite on Friday, and a positive tone dominated on Monday, with optimism over the Chinese outlook as coronavirus restrictions were removed further, with broad controls dropped. The dollar did post some sharp losses on Friday. It slid drastically lower, posting some pretty interesting patterns on the charts. We'll come to those shortly. We've also seen UK construction has moved into contraction territory. The UK PMI construction index declined further to 48.8 for December from 50.4 in the previous month, and this was below the consensus forecast. We saw some strong Canadian employment data as well. The Canadian labour market reported a strong 104,000 increase in December, compared with expectations of close to 10,000. So it was a massive beat on that. So that's it for the latest headlines. Let's take a look at how this has impacted charts. It looks as though cryptocurrency is off to a pretty bullish start today. Steve, do you want to
Yeah.
take a look at some charts for us?
Yeah, sure. Pretty decent start in Bitcoin. If we look at it on the weekly chart, it doesn't look that significant, but we'll drill down to the shorter term time frames. But give you an idea where we are on the overall trend is remains negative overall. But we have, you can see, we got off to quite a decent start, quite a decent end to last week, and quite a decent start to this week. This is the daily chart, and we can see we've sort of like since the end of the year, we posted a low, and we've been posting higher lows since then. We're above the 55-day moving average and moving up quite nicely, quite consistent. The ranges are a lot narrower than they have been before. Taking a look at the 4-hour chart on Bitcoin, we have broken above some significant resistance around about the 17,000 level, 17,044, above there now. So we're targeting the next resistance, which is probably a range between the 18,000 and the 18,400 area. In interim resistance may come in the form of 17,500, where we had a little bit of a swing high in middle of December, basically. So yeah, it looks pretty positive. Look at Ethereum as well. That's having a nice move up in line with Bitcoin. Next resistance there, 13,000 sorry, 1350, trading at 1307 at the moment. And Ripple, obviously, still one in the news. Is it a security? Is it not? Only the SEC knows. So let's see how they want to swing that. But overall, we had this big spike down on the first day of the year, got down to 30, and bounced back up, trading around 33.5 for most of the early part of the week. And we managed to push a little bit higher, got up to 2nd of Jan high and the 9th of Jan high. We've got a little bit of resistance coming in now at 35.45. Above there, more solid resistance at 37.27. So they're the levels to watch on them three cryptos. Looking at gold, gold had a nice push higher. Unfortunately for me, I was going against this on non-farm payroll. That didn't work out. Had a really bearish candle on Thursday, bearish engulfing. I thought that would continue into the weekend. It didn't. It reversed very sharply, and we continue to target the measured move higher from the inverse head and shoulders formation. That's up at 1966. We've got decent resistance coming in at 61.8% fib. That's around the 1900 level. 1876 trading, which we got up to there on the 13th of June last year. So we are trading, and we've actually traded above there. So we traded up to where we were trading in May last year. So really significant positive steps forward for gold. It really is performing extremely well at the start of this year, continuing to. Inverse head and shoulders on silver, also pushing up there. We've got the measured move target coming in just below the $25 level, trading at just under $24 now. And then the significant resistance in silver above there, $25.75 to $27. Copper has broken above the 200-day moving average on Friday and closed well above it. It's the highest close we've had since the 11th of November. And today we've actually taken out that high from the next day, which was the 14th of November, the Monday, and we're trading above that now. So for me, that's a really significant positive move in copper. Also, we could take a look at the dollar index, and maybe the dollar's taken a little bit of a beating, and that will lead to these prices moving higher, which are priced in dollars. So if we can continue this and hold above this level for the rest of the day, then that would probably give us a little bit of a buy signal. We're seeing this bullish crossover on the 5500. We've had 55 200-day moving average, a golden cross potential. We could see that in the next week or so in copper. So all eyes on that. And yeah, take a look at crude oil. Crude oil and energy markets haven't had the same type of market move. Before the end of the year, we were really concerned about a really cold snap in Europe, and obviously the issues with Russia-Ukraine conflict, and the prices were well supported and high before the end of the year. However, that cold snap doesn't really appear to have happened. So traders having a bit of a readjustment on their expectations for the energy markets. We saw markets move lower last week, Tuesday and Wednesday, and we've had a little bit of a recovery into the start of this week. So a little bit of support coming in there just in front of the swing low that we saw, the WTI at $70. We stalled at 72.72 and pushing higher, now trading at 75.68. So looking quite positive at the start of the week. But obviously on the shorter term timeframes, we're still under the cosh a little bit. Still, the trend is lower on the 4-hour chart. And if we basically take a look at that, we were looking for that inverse head and shoulders formation. We can get rid of that, but it does look like there is a bottoming formation around here somewhere. So prices have just recaptured sort of like losses we were seeing on the 4th of Jan, and a little bit more room to the upside. So look, positive start to the WTI crude oil and the Brent as well, obviously. Same sort of formation, trading at just under a $5 premium now in Brent. The resistance coming in just above where we're trading now, 80.70, yeah, around about 80.70. And yeah, 4-hour chart, still in bearish territory, trend still lower, but overall looks like we might be posting a higher low. Finally, I'll take a look at natural gas. That's been pretty aggressive, pretty to the downside, obviously, and but we have hit an area that, if we go back all the way to December 21, so well over 12 months ago. And if we look at Friday's price action, it posted a bit of a bullish hammer. For me, this could be quite significant because it's happened around a really significant area of support from way back December 21, and maybe we could get a little bit of a reaction off this support. We've still got this gap on the charts, and that will turn out to be quite a significant gap because it's on a weekly chart now. So definitely something to bear in mind. Normally, chart gaps get filled pretty quickly. It's very rare that we leave them on a weekly basis. But so for me, there is potential for a little bit of a pullback after the aggressive sell-off in the first week of Jan. Fill this gap, and then maybe we can continue the move lower. But overall, bearish on natural gas also. Over to you, Joe. Let us know what's going on with that dollar.
Yeah, sure. Thanks, Steve. So let's take a look at dollar index then. So we've got this head and shoulders top pattern in place, which we keep referring to. We had the price action move lower, which looked to be some sort of maybe ending wedge formation. We saw a breakout of it here on the 3rd of January, which maybe indicated we were going to see a decent move to the upside in the very short term to correct some of this big downward move that we've seen. But on Friday, we posted a pretty nasty looking candle. You can see we moved above the high that we posted on Thursday, all looking pretty rosy at that point, in line with our thoughts. But then we get this massive reversal and a close at the lows of the session. So that's kind of going some way to, I think, invalidating that potential setup. And we are now testing this massive level of support that we've got here at 103.45. So this is very key. We're testing it at the moment. If we do get a close below that, then it completely invalidates that wedge and corrective thoughts that we had with regards to the dollar index, and we can start looking for lower prices. The next level down is the 50% fib level, which is at 102.15, and then potentially lower than that towards the 61.8, which is at 99.17. So still looks as though the head and shoulders top is dominating, and we are likely to see lower prices here on the dollar index if this level breaks on a closing basis. So that's going to be the cue for me. If we do get a little bit of a move below this today and then we reject it and manage to close above this level, that may indicate a bit of a swing failure, and we could indeed continue to see prices range bound or potentially move to the upside. But pretty nasty candle that we posted on Friday, and it's been replicated pretty much across the board with these dollar pairs. If you take a look at Aussie versus the US dollar, we can see here that we posted a really large engulfing candle. We're trying to break now through some significant resistance here at 68.93. Again, if we can close above that today, that would be pretty bullish and indicate that higher prices are likely. Take a look at euro US dollar. We can see here a big bullish outside day candle was posted on Friday. This is where we make new lows on the session and close above the highs of the previous session, which we can see we've done there, and we're pushing higher again. So we've got some resistance here at 107.36. If we can get above that, then maybe what we've just formed here is some sort of continuation pattern, maybe something along the lines of this. Let's just get a little channel. Something like that, not particularly great because we did get these spikes, but if we can get above that, then that may indicate a continuation higher towards this 50% fib level at 109.42. If we take a look at cable, it's a similar theme. We posted a bullish outside day candle on Friday. We made new lows on the session, closed above the highs of the previous session, and we are pushing higher again. So potential for that to be another continuation pattern and starting to head higher back towards these previous highs that we hit back in mid-December. We take a look at dollar yen. So we were trading within this bearish channel, and we still are. This was my gun to the head trade yesterday, on Friday, sorry. It was trading bang into this black line we've got here, this resistance at 134.50. It rejected at that level and prices moved lower. We're still trading within the bearish channel. We do have some key supports around this region here, which if we do get a break below, I would say 130.56, which is this black line here on a closing basis, then that would give us enough confidence to suggest that lower prices are likely to be seen here as well. So in terms of requests, we've had one to look at sterling yen. So let's take a quick look at that. Was talking about this last week. It was trading in a bit of a range, as we can see here, capped by this blue line, which is at 169.09. Then we had some support at 163.07. We sliced through that with a really impulsive move to the downside before eventually hitting the measured move target of this range, which was at 157.00. Then we posted this reversal candle on the 3rd, followed up by a really strong impulsive candle to the upside, and prices look to be still ticking higher in the short term. So looks pretty bullish in the short term. We do have resistance here at 163.07, which I think if we get a test of that, it'd be interesting to see what kind of reaction we get. If we take a look at this on the intraday basis, we can see that there is a 78.6% fib level at 160.84 from this swing move here. So that may provide some intraday resistance. I know the guest that requested us to take a look at that is potentially looking at a level at 160.90, which is slightly above that 78.6% fib level. So from an intraday perspective, there could be some value in that. But if we take a look at the daily chart, we can see that prices are attempting to move higher. One thing I like to do when looking at currencies is you look at currency indices, which is basically a basket of all of the currencies together. So we can look at, for instance, the Canadian dollar, we can look at the dollar index, we can look at the Australian version, British pound, etc. So these often give you a bit of a clue about where you should be looking to set your trades up. So if we take a look at sterling, for instance, we can see that we've got this bullish outside candle that we posted on Friday. So that would indicate maybe that the short-term outlook for sterling is quite positive and that we could see higher prices. If we take a look at Japanese yen, we can see here that prices appear to be forming some sort of bottom pattern. We can see that here on the charts, maybe a left shoulder head and a right shoulder. So arguably you'd say that looks quite bullish, but it is in kind of corrective mode at the moment. It has found some resistance at these previous highs that we can draw on here. So these spikes that we saw in June, in August, and again, we've tested that. So in the short term, likely to be quite range bound. So you would probably favor owning sterling over yen at the moment. So that maybe go against that view of going short sterling yen. And obviously we can look at the dollar index as we often do, but it's worthwhile looking at these as well for other currencies that you're trading and trying to form a bias using these markets. Any other requests for currencies, Steve?
No, I haven't seen any other requests for currencies, mate.
Okay, let's move on to indices then, shall we?
Yeah, let's take a quick look on. No, nothing on there. Yeah, let's take a look at indices. We'll start with FTSE. FTSE's broken above significant resistance from on Friday's back of Friday's non-farm payroll. We're actually up to levels we haven't seen since all the way back in August 18. So really, and that we had a close above there on Friday as well. So you know, we've got to respect this indice rally. I've sort of like I've accepted it. I can move on. I'm happy with myself. I've got inner peace. So yeah, I'm going to allow this rally to sort of like play out. It does feel like it's we're off to quite a bullish start. It feels like maybe the fear over the interest rates may be subsiding, and we can you know, take on the inflation animal and move forward with it. So all the we highlighted some sort of like significant formations in the charts, especially on the daily charts, and that was the golden crosses that we were getting. That happened in early Jan for the FTSE, 2nd of Jan, so that was last week. And but in other markets, it happened well before that. We got it in the middle of December in the Dow. We got it in the S&Ps hasn't happened yet, but we got it also in the DAX around about the same time. So, and we see this market moving higher. It's a real big formation that we've considered. The last time it happened was way back in early February 22, and we can see what sort of the market did after that. So we're getting the reverse indicator of this golden cross rather than a death cross, and it looks pretty good. We've got some significant resistance still to get above. For me, one of the major ones in the DAX is would be this level here, up at 14,813. And I'm going to narrow my band of resistance down to that level. And yeah, we're well into sort of like that defensive territory for the bears. But take a look a little bit more detail of what the price action looks like on the shorter term time frame. The 4-hour chart, we're in bullish territory. We're above the Ichimoku cloud. We have had quite an exponential rise in terms of sort of how quickly and how rapidly this has happened since the start of last week. So wouldn't be surprised to see a little bit of a pullback, but really at this point in time, I would say buy dips in indices. Now, you don't hear that often when I talk about indices. The Dow also, we're above the Ichimoku cloud on the 4-hour chart, and support all the way down to 33,475. And dip buying looks like to be the thing to do there. We are short-term price action really looks a little bit toppy, so I would expect a bit of a pullback after last week's rally. The main one to really focus on for me is the Nasdaq. That's we broke below the 4-hour Ichimoku cloud in the middle of December, when we were getting the sort of like the bullish crossovers on the other indices, and we've been below that since then. Now we're back above it. So we had a previous upward trending support which worked, which was quite a decent trend line, and it had 3 decent points connected. Sorry, there's 3 decent points there. And we're now testing the underside of that, so the reverse trend line. If we can get above and close above that sort of level today, then we should see further upside during this week. The S&P's also nice little corrective channel, posting these higher lows and looking pretty tasty now that we're above that resistance at 3,900. Major one for me, or the pivotal resistance level or level we saw last year for me, was 4,000. So really focused on that level rather than the 3.9. Again, looks a little bit toppy on the short term time frames, maybe a bit of a pullback, but dips expected to be bought into. Finally, China 50, China opening up. Obviously, they've the restrictions on travel. External people can now move into China without any restrictions, so that's quite significant. Will the economy open up? I mean, the indices are saying yes, it's happening, but let's see if we get the follow through in the physical sense. Hang Seng obviously performing really well and moving higher also. Dips being bought, and there's no real sign of that slowing down. Again, Aussie 200, quite a commodity based indice, and has got a lot of commodity based products in there, and that seems to have stalled ever so slightly after the real exponential rally, but we are in bullish territory on the shorter term time frames. That about covers off the indices, Joe.
Lovely, thank you very much. Okay, let's move on to the gun to the head trades then. So this is where Steve and I pick trade ideas live on the stream. And as if we had a gun to our head, what would we trade right now? We come up with trade ideas that have stops and targets, and they must have risk reward ratios better than 2 to 1. We publish them up to our TradingView profile, but as of last week, we've also started publishing these live in a trading account. We set up an account with £2,000 in it, and we're now following these trades on a real-time basis. So Steve, can we have a look at how they did on the chart, or should I just reel it off based on the numbers I've logged?
Yeah, reel it off of the numbers you've logged, mate.
Okay, so Steve went on gold. He was selling it. Obviously, it was non-farm payrolls on Friday and the ISM data, so we always expected it to be a tricky one. Steve was stopped out on gold. I went short of dollar yen, which worked out really nicely actually. At 9 o'clock when we closed these trades, I was 1.36R on side. So very happy with that indeed. Let's just bring up the chart actually so we can see the point of entry. So this was on Friday morning, sold it at this level here, which was at 134.35, and moved nicely low. I didn't quite get to the target, but we closed it off for a win. So that puts our balance on our account, Steve, having started with £2,000, 2,000 and
779 by those
yes,
things. that right?
£2,007.78 I've got on chart on the screen here.
Okay.
So yeah, we are up. We're trading with £2,000, so we're not expecting miracles. We're risking 2% per day of our capital, and we'll continue to do this and see where we can get with it. So Steve, you got anything ready today? Anything you're looking at?
I have. I've sort of, you know what I'm like. I can't sort of like bring myself to buy an indice until I get a little bit of follow through. Now, when we analyse our trade ideas, and I've analysed my trade ideas over 30 years, and I always find that the Tuesday, Wednesday, Thursday for me are the better days to trade. Monday and Friday, avoid at all costs. That's basically a very short summary. I probably have my best days on a Monday and a Friday, but overall, generally, the market really isn't into its real sort of like weekly trend. So I think when Tuesday, Wednesday, Thursday for me always seem to sort of like work out better. So I'm always a bit cautious on a Monday. So I don't buy indices on a Monday. Overall, I'm looking the one I'm looking at really is natural gas. We've formed a bit of a bottom, a bit of a bullish hammer here. So the downward momentum has stalled, and it's been really aggressive to the downside. We've reversed sharply Friday. We've got this weekly gap on the charts, and it's likely to be filled. I think this is a good opportunity for it to fill. And on the short-term 1 hour chart, we can see this inverse head and shoulders formation. I know there's a lot of people out there saying, "Oh, another inverse head and shoulders formation," but they are pretty cool when they work. So, and they're one of the most reliable chart formations to actually trade off. So yeah, you can see quite clearly the gap on the chart here. So that's the the target level to aim for. Whether it achieves it in a day is another thing. Not not really likely. But this is the sort of thing I'm looking at. Now I can be. Let me just see what my. Yeah. So. I want to be a little bit aggressive with this. I'm going to go for a 4-to-1 risk reward on this. Now we've only got a day to sort of like fit it, so it's I'd be very surprised if it gets there in a day, but I'm going to go for it anyway. It's a gun to head trade idea. I'm going to buy natural gas at 371.70. The stop is at 356.70, and the target is at 431.70. There you go, Joe, and I'll put that live now.
Yep, get that on.
I've got to put it on the one. That's where our account is. Natural gas. Yeah. Let me just replicate that there if I can. Over to you, Joe. What are you looking at?
So I'm looking at currencies. I did like the natural gas trade, to be honest, but I knew you was going to do that, so I had to find something else. Currency is a bit of a mixed bag at the minute, given that we saw this massive turnaround on Friday. The one that really stood out to me today was Aussie CAD. And I'll come back, well, because I know Steve's going to be spending some time uploading that trade idea. So let me go to the currency indices again. And so if I'm actually looking at selling Aussie CAD. So based on that, if I look at these currency indices, I want to be seeing bearish price action on Aussie and bullish price action on the Canadian dollar. If we take a look at the Aussie index, we can see that that is trading into resistance here. Although we saw a very strong turnaround on Friday, but it does need to break above this level at 68.69, and if it does, then I need to forget about it and go bullish on Aussie. But it's into resistance at the moment. But if we look at the CAD index as well, we can see a really bullish engulfing bullish outside day candle was posted on Friday. We closed above resistance at 74.27, so therefore I want to favor being long Canadian dollar as opposed to the Australian dollar. Then if we take a look at the intraday setup of this particular trade, we can see here on the daily, sorry, Aussie CAD is what I need, isn't it? We can look at it on the daily. We can see it's failed to get above this resistance level on Wednesday last week. We had a swing failure trying to attempt to overcome this resistance from the 13th of December. So while we're below this resistance level, I think there is potential for this to dip to the downside. We're also into a 78.6% fib level on the daily from this high that we posted in April, down to these lows that we posted in October. Taking a look at the intraday charts, we can see that, again, we saw another swing failure here. We saw an attempt, well, this is the swing failure we just mentioned, actually, the one we saw last week, trying to get above this level from back in December, failed to do so. In the very short term, so this swing move here, we've got a 78.6% fib level, which prices have stalled into today. So I'm going to sell it at the current levels of 92.88. If you can get that on for me, Steve.
Yeah, 1 second.
My stop loss is going to be above this high from the 4th of January, which is going to go at 93.49, and I'm targeting a move down to this cluster of previous lows at 91.20, let's say 91.20. So that's a 2.79 risk reward ratio on that today, and I'm going to get it published up to our trading view profile as well if anybody wants to check it out.
Yes,
So,
just give me them levels again, Joe.
So we're selling at market. The stop loss is at 93.49.
Okay.
And the target is 91.20. So we're risking 1% on each of these ideas today.
So that looks about right, doesn't it?
Yep, 1% risk. As long as it's that, then get it on.
Yeah, let's do that. Let's do that and see what happens. There we go.
Yeah, we're in.
Yeah, all looks good. Funny enough, I just wanted to sort of like cover off what my natural gas, the issue I found with this. Obviously, this is the trade idea I talked about on the show. Here we go, because I was looking at a different price chart. It looked like I was getting in at 371.70, stop at 356.50, 356.70, targeting 431.70. But the prices are different on Oanda. So I'm still going with the same trade idea. You can see there doesn't seem to be a gap on the Oanda chart. However, I imagine there was a gap, but it just doesn't show them. It shows the opening price as the last traded price on Friday on Oanda. So the chart, the actual gap doesn't show up, but it is targeting that same gap. So we're in there. The prices are a bit different. We're getting in at 385. Stop is at 370. So still a 15-point move to the downside required to stop us out, and 60 points to the upside. Still a 4-to-1 risk reward ratio. But I just wanted to sort of re-emphasize that you look at different brokers, they'll have different prices because they base their price. They're a derivative. They're based on the actual underlying natural gas price. But sometimes they work them out or calculate them differently.
Yeah, lovely. Okay, just one extra request on Aussie New Zealand dollar. Hopefully the person that requested is still online and viewing. So this is the daily chart for Aussie New Zealand dollar. We saw it trading a massive upward bullish channel for a considerable period of time, really, going back to November 2021, before it finally broke down in October last year. And from that point, it then triggered, well, a pretty significant wave of losses, really. We can see that there was a downward sloping head and shoulders top that formed here. We then saw some corrective price action, which ended up being a continuation pattern and drove prices lower towards that measured move target, and also the 78.6% Fibonacci retracement of that entire up move. The correction that's taken place in recent weeks has been pretty strong indeed, but we have rallied now into a 38.2% fib level of this down move here. So we appear to be banging our head against that resistance. We've also got some previous lows in here from November last year at around 108.80, which seem to be preventing further gains. So for me, that could be a reasonable opportunity to sell that, looking to target a move back lower in line with the trend that we've now established on the downside. So providing that the 108.80 level continues to act as resistance, then I think the bias remains on the downside with that. Hopefully that was helpful. Okay, data for today. Let's take a look at what we've got out. It's pretty quiet start to the week. We've got euros. That's not correct, is it? That's last week's. Forget that, guys. I'll remove that off the screen. Silly boy. Okay, we've got the Eurozone Centix Index, which is due out at 9:30 UK time, so just under an hour. Then at quarter to midnight, which is a bit random, we've got the Bank of England member Peel speaking. So I don't know if anybody will be up at that time and have any trades on sterling, but you should be aware of it. But I think the main number this week that we're all keeping an eye out for is the consumer prices, the CPI number in the US, which has been particularly market moving over the last few months. That's due out on the 12th. So what is that, Wednesday? Thursday. due out on Thursday. So really all gearing up towards that this week. Okay, I think that's pretty much it from us, Steve, to kick off the week. Thanks for watching, everybody, and for getting involved. If you posted up your comments, we really appreciate it and hope that we can help out where we can. Have a great day, everyone, and we will be back on, tomorrow morning.
Yeah, lovely.
Have a great day. Bye.
Right.